What's up, traders? Welcome back to another video. Today we are talking about the low-hanging fruits. Today and yesterday we had very beautiful setups of the low-hanging fruits, and I believe it is essential that every trader understands how this setup forms, because the market does three things. The market will break out, pull back and continue with the trend. The market will break out, pull back and reverse, and the market will break out, pull back and stay in a range. Alright, so we'll be looking at what happened today and yesterday. Today the market started simply by, we started with this gap, and then the Asian session set the high and the low of the day. Then in the London session, price consolidated, and then in the gap time, this is still London session, price pins the high. So if you go to the 1 minute time frame, this is 1 pin, 2 pin, 3 pin. This is a triple top. So we have 1 pin, 1 push, 2 push, 3 push for the breakdown. So this is an already broken down market. And why is it a broken down market? So yesterday we had another broken down market, and it gave us our first red day. So as you can see, from this is Friday, this is Monday. Monday sets the high and the low of the week. Alright, and then what happened? The market broke down and closed below the previous day's high. So this is day one. Alright, of course after day one we go to day two. Day two is continuation. Now I'm not predicting the market, but when I came to the market at 8, this is what had happened. The market had broken down. No, actually at 9, I did not realize daylight saving had done its thing. We've already shifted now. So when I came to the market, it was 9. What had happened? The price had broken down to the low of the day. But also, when I see these big pins, huge candles, these are bearish candles, huge bearish candles, very strong pins, very big pins below, I know this market is not ready yet to reverse. We are continuing lower. Then I also saw we have 1 push, 2 push, 3 push to the high. So 3 pushes to the high. If you look at the 1 hour, I think it's clearer. We have 1 push, 2 push, 3 push to the high. That is from the beginning of London to the beginning of New York. We had 3 pushes to the high, and then with a break in structure. So when you look at the 15-minute time frame, this is the first move. And we always know, we've been taught by Stacy Buck, the market moves in 3 pushes. So we have 1 push, we have another push at 9. What are you expecting? The last push, at least to the low of the week. So that is what I was expecting. Another thing I look at for low hanging fruits, this is the setup. So we have a high in place, and then a broken down market, but we do not trigger the low of the day or the low of the previous day. So you might find they just pin the low of the day, but the way they've done here, they've pinned the low of the day, but there is still some space to go to the previous day's low. Once I see this, I know we are setting up for an easy scalp. So this is not like a very long trade in terms of time. It is a short trade, but a low-hanging fruit trade where it breaks down very fast. So there are some qualifications for a trade setup to be low-hanging fruit. The first thing is there is space below. Well, for today it was space below Asia, but there must be space between either the low of the day and the previous day's low, or the low of the session and the low of the day. There must be some space. So by space I mean, if you understand the pump and dump setup, we have pump, 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 and then we have our M structure, and then we start coming down. So once the market starts coming down, and then assuming this is Asia, this is London, in the New York session, what I'm expecting it might be maybe 3 pushes to this previous high. It is not the high of the day, but the previous high, for the continuation move to where this pump began. So if you look at this setup, we had this gap. So we still have a space below the gap. We've not cleared the money. This is where the money is. So that is a criteria that must be there for me to look for a low-hanging fruit setup. Now, once we have this space, there are other criteria that must be present. So in the 1 minute time frame, there are confluences. So usually there are trend lines from the first hour. It might be the first hour, the gap time. But the point is that we have somewhere where price might come back to retest. And that is what happened. So the price started consolidating the first 30 minutes, and then they came back to the trend line. So once we reach the trend line, I know if the market now gives us an M pattern with a break of structure, retest, and an engulfment, that is an entry, a very good entry for you to look at your setups. And what happened? The market came back to the trend line, came back to this trend line because it's an already broken down market. And then after that trend line, it broke structure. This is where it broke structure, here. So we have this break in structure, and then a retest with an engulfment here. So this engulfment at 9:59 with timing 1 minute before the close of the 15-minute candle, the close of the second hour. This was the setup. Let me show you. Here it is. I think. All right. Before that opens, this is the entry. As you can see, it was a beautiful setup that broke down really quickly. And yesterday, the same setup occurred. Asia opens and breaks down. London continues breaking down. And then in the first hour, we have this low-hanging fruit opportunity because we still have this space here. And what happened? In the first hour, we have this trend line. Price goes back in 1, 2, 3, and then gives us a break in structure with a retest, and then the engulfment for the entry. Look at that. Beautiful entry. But as you can see, these trade setups are usually very fast. So if you get in, get your money and get out. Otherwise, the price will come back to stop hunt you. So, so this is the entry. As you can see, the price, we have this trend line. Price comes back to this region. gives us an M pattern but fails to give us an engulfment. The next thing we have again this it's a nice head and shoulders pattern, but well, it broke structure again with the retest and the engulfment for the entry. Beautiful setup, and as you can see, it was quick and easy, no heat. So that is a strategy that, if you understand it, will serve you well. It will serve you well, because for most of the time you will find that the market really just follows the trend. As for me, I look for reversals because, well, they are a very lucrative setup and they happen very less frequently, so I can focus on my other businesses. But if you just want to trade every day, then it behooves you to understand the process of the market, which is breakout, pullback, continuation. Breakout, pullback, continuation. So that is the same thing. Breakout, pullback, continuation. You just have to understand where the exhaustion is. Anyone can trade the market if you can understand where the retest ends for the reversal. Anyway, hopefully I opened some eyes for some of you. If you have any questions, please comment your questions. I will make videos on them and dive deeper into them. And of course, it helps with the algorithm. So yeah, hopefully you got value from today's video. Like, subscribe, and see you in the next video.